So tonight you're looking at Indies Pharma because their revenue for the 6 months ending April 30 is up 4% and net profit is up 3%. So it's just a little uptick, but give us the breakdown on Indies, Leo.
Yeah, man. All right. So first off, since Indies is not really a regular company, so just brief overview. So the company primarily distributes pharmaceutical products. That's their main operations. So looking at the numbers, as you said, for the 6-month period, there's a marginal growth there. If you look on it for the quarter, just a quarter, you realize that there's a 10% decline in revenue and a 9% decline in profitability. Some minor fluctuations there, nothing too egregious. And I mean, overall, though, if you look on the trend over time, it's been higher. So that's fine, right? Now, when you're looking at the cash flow statement, so that's a brief summary. Operating cash flow is up big time. So that's from 32 million to 407 million. The key driver of that was really just what was happening with working capital. So basically what happened is that they didn't pay out, they didn't spend as much on inventory. That was one of the main drivers for the boost in operating income there, operating cash flow, sorry, which again is very important because if you drill down further, what you realize is that the cash flow outflow from financing activities was a lot higher. So one of the major reasons for that is because of massive dividends. So they pay $180 million in dividends for the 6M period. And it's a big increase from the previous year because in the previous year they pay about 147 million. So that's also something good there for investors. Now, looking at the charts here, if you look at the recent performance of the stock, year to date is up 3%. But again, if you look at the context of the market, because we know generally in kind of bear market here, the junior market is down 10%. So that's actually a decent level of outperformance there in the stock. Now, if you look on the stock now over time, you can see the stock is not quite at the highs it was back in early 2021. However, it's been significantly higher than listing price, and it's kind of been on an uptrend. So if you look on it another way, when it listed in 2018, the stock went up about 112% that year. Because it listed in August 2018. For clarification,
that was a time when all IPOs were hits, double the money in
quick time. Because that was so that was a literal double there in the span of a few months. Additionally, the month that it listed, which is the August, the stock was up 78%, and it was that mid-August that it listed. So you can see those were the good times, but
the good old days.
The good old days, right? Well, the market goes through cycles, so we're just in one of those not so good cycles. But overall, this stock has performed. 2021, it was up like 26%. So it's kind of been ebbing and flowing, but overall, it's done well for investors, right? So looking at this the other way, so when you're looking at the activity on the stock, you can see clearly an uptick in activity. Recently, 1.7, almost 1.8 million. Dollars traded on an average day now, which is a lot higher than it's been, going back to 2020, right? So a lot more activity, a lot more interest being picked up on the stock. We'll soon get into why that might be. Now, on a PE ratio, I'm looking at the PE ratio of the stock, it's a bit elevated compared to historical levels, meaning last 5 years, the average have been around 20 times, but now it's at 21 times. So it's about... it's kind of close to it, so it's not really over or under. Really, it's kind of in the middle in terms of the where it's trading, in terms of a PE ratio compared to where it's historically traded, right? So there's not no wild difference there, and a similar thing can be seen when you look on it on a price to book level. Now, again, with the dividend, this company has been fairly consistent with dividend payments. So almost every year, so at least going back to 2020, you're getting the dividend payments from this company. Recently, they paid out again another big one, same 180 million as I pointed to earlier. So that's big. Now, again, this is something I touched on last time, but I want to touch on again. Why investing over time can be very important, right? So what you're seeing for the company, if you look on just cap gains over the last, since the end of 2019 to present, the stock's up around 9%, right? But if you reinvest those dividends, you're looking at 37% gain over that time, like a 28% difference. So basically, the idea here is the same. while, especially when the market's not so hot, the returns on the cap gain side can be fairly low. The reinvesting of the dividends during that time can be quite lucrative for when the bull market or when the company picks up. Now, another important thing to note with this company, recently they had a drug that they got approved for to go into the US by the US FDA. So that drug, regadenoson, sorry, that drug has a potential to do very good for them in terms of revenue and profitability. The latest I'm seeing from the companies that they expect to really see sales driven by this drug coming in the Q4 of this financial year. So yeah, so that's more like towards the, for like what, August or so, they might start seeing that. So the thing is that those numbers, as in terms of the revenue that they can drive from that, can help boost the company's revenue, profitability, and of course, again, the dividends. So that might explain some of the more interest in the company in recent times in terms of trading activity, because again, there is some strong potential there. But you know how it goes with these things in terms of these drugs in the US. They can be, it's kind of difficult to forecast sales because there's a lot of moving parts. But it does have the potential because it's a big market that they're going in, which has to do with like cardiovascular. So this drug could be something to watch for them in the near future in terms of the impact that it could have on the revenue and profitability.
It's very interesting. So what is the outlook for Indus Pharma? Actually, even before we get to that, you spoke about why there is this sudden interest in Indus Pharma. Why is that? What is causing that spike in the trading volumes, you think, for Indus?
Yeah,
Why are
man.
people suddenly interested?
Yeah, man. So I'm thinking, looking at the timing of it, it could be around the potential that this drug can offer for them in terms of the potential for the drive revenue and profitability. Again, forecasting it is kind of difficult. All right, so if you look at it, so based on the size of that market, if they capture about 2% of that market, it could really like double them revenue and of course stand to double them profitability. But the thing is, gauging the impact and how it's gonna, the time it's gonna take to impact that market can be difficult. So that's where the challenge lies. But it's just the size of the market and how much they need. Because again, they just need like 2%, and it's a huge game changer. And even if they get half of that, it still would significantly increase revenue and still would significantly increase profitability. But again, these things go. And I mean, I think especially now with the US market, in terms of what's happening, in terms of the policy direction is a bit difficult to gauge. Any insight or expectations of what can unfold in the future is a bit difficult to price now. But the idea is that, look at it this way, as the company is now, they're generating good cash flows, good revenue and profitability and steady growth. This has the potential to escalate that. So it's like another notch that they can hit. As to how it's going to play out, again, that's difficult to say, but it's something that does give them the potential to do very well in the near term. So how I'd gauge it, we have the news now, and we have a timeline when we expect to start seeing this. The idea is basically to watch it closely and see how it actually pans out in terms of the actual numbers coming in. Because again, if you see, for example, let's say Q4 numbers come in really strong, right? And again, a big part of that is the drug price, the new drug being sold, like it's readily accepted in the US market, for argument's sake. Then that looking out into Q1, Q2, and in the future, at least the next financial year, you kind of get a gauge of what's possible, as in like a more realistic gauge, meaning you actually have numbers now on the ground and you're not, it's not just theorized anymore. You actually have numbers on the ground. Then now you can actually make a more sound forecast as to what's expected. But again, how it is in the market. Some persons are going to position ahead of that, taking a more, speculative bet, say, this thing can have the potential to do a lot and then kind of getting ahead of that. Some persons might want wait it out a bit, see the numbers come in and say, all right, this is more solid and forecast it out. So for argument's sake, let's say the Q4 numbers come in and you can see a clear 150 million, for argument's sake, coming in from this drug, right? Then you can, for example, start tacking on that kind of number into Q1, Q2, Q3, and then see how that's going to impact what the company's revenue and profitability is going to look like. And then that's going to be a more solid forecast than to make that now before we actually see the sales.
How big is the US market for indies compared to their Jamaican market?
I mean, the Jamaican market, all right, so the US market is going to be bigger. But remember, they're referring to US markets is really specifically around this drug. In terms of any, what do I call it now, any material shift in terms of the potential. As I was saying, 2%, if they can get 2% of the size of the market, I don't recall the size of the market off the top of my head in terms of the cardiovascular heart market in the US, particularly around this drug.
But this would be their first time. This would be their first time entering the US market?
Well, in terms of getting US FDA approval, yes. Yes, in terms of getting that, definitely. I don't know if technically they have some other things in the market in terms of other products that they distribute. I don't know. To be honest, I'm not 100% sure. But in terms of getting that approval for this, that's the first time. It's the first time, definitely for them. That's the first. I can speak to that more definitively.
Sean wants to know, what about the pharmaceutical tariff that Trump is proposing? Is that going to affect them?
Again, so that's what I'm talking about. There's a lot of uncertainty there because there's a lot of proposals. So, for example, I've seen one where the idea is that any drugs coming from outside of the US, for argument's sake, manufactured outside of the US, would be tariffed aggressively, right? But again, it's a moving target, and that's the reason why I said it earlier, is that the uncertain. So, if it is imposed as announced, right? Definitely. Is it going to be? Hard to tell. Because again, as we have seen, it's not news to anybody. There's a lot of back and forth regarding these tariffs in terms of them on, then the pause for 90 days, then they're back on. So it's really difficult for me to sit here and say, I don't think it's going to happen because, at this point it's difficult to tell. But if it does, it's going to be an impact. But again, how I look at it is that as it is right now, the company is doing well. So it's not like the company needs this to, be the best thing ever in order for the company to continue to do well. It's just.
But it would be great.
But it would be great. So that's the thing. So it's a plus. So how I'm looking at it is that I kind of discounting that risk, meaning there's a chance that no fault of theirs, the market not good for them because some tariffs come in because I think the drug is going to be manufactured out of India. So then that's gonna probably be a problem, of course, shipping that to the US market. So
So we have Ryan online giving us some stats. He says the US cardiovascular drug market was valued at $58.1 billion in 2022 and is projected to reach $67 billion by 2030.
Yeah. So it's a pretty big market. And again, that's always one of the upsides, one of the potential upsides for these smaller companies is that they don't need a lot in order to get to another level, meaning like to double or triple profits. They just need to find something that does marginal, because they just have to marginal tip. As you can see that number, they just need a fraction of that, in order to completely change in terms of the revenue and profitability of the company.
It's all about marketing. It's all about marketing. Drug companies go heavy on the marketing, courting doctors, hosting functions for them and introducing their products. So you have to see what marketing power Indies Pharma is able and willing to put behind it.
Yeah.
Targeting that sector. Thank you so much, Leo, for those updates on Indies. And if you know Dr. Mapuri or anybody from Indies, tell them we've been trying to get them on the show. We really want an update. We've never had them on Taking Stock in 5 years. So almost 6 years now. So let's put the word out. Let them know we like to have Indies Pharma on the show.
Yeah, if I see him, I'll let him know.